Hey everyone, me Kevin here. I am live now with Ali Moiz, and I'm super excited because he is a startup investor who's sold startups for over $200 million. He co-founded, for example, Streamlabs, sold that to Logitech, now has a new startup called Stonks.com, which we'll talk about later. But I want to bring Elliot, I want to understand, first of all, what the heck is going on in this market? What is going on in this world? Do we got to get into startup investing to make a buck, or do we keep throwing money into those stonks? What do we do to get ahead in this world, and how did you get your start? Welcome aboard, and say hello to everyone, Ellie. Thank you so much for being here.
Yeah, thanks for having me, Kevin. I kind of feel like a giddy fanboy because I've been watching your channel for a while, and it feels unreal to kind of be here. But here we are. Thanks for having me.
Oh, my pleasure. Absolutely. Thank you so much for having for coming on. So, tell me what's going on in the market right now. I know you're working on you've had startups in the past. You're working on a new movement here with Stonks, but I want to know what are you seeing in this market overall? Is it the way to make money today going into the meme movement and trying to follow the trends, get in and out quick enough? Is long-term investing, fundamental investing still a thing? What are you thinking? And how did you get started with startups? I know a lot of people are excited about that. How did you tell us about this?
Geez, maybe what's a good place to start? My first startup was actually in first grade, kindergarten, first grade in school, where I made stickers. I drew stickers, cut them out, and sold them to other kids for lunch money. And by second grade, you remember, I don't know if you ever did trading cards, right? Like Pokemon, or back in my time,
Yu-Gi-Oh, Pokemon.
yeah, like Transformers and a bunch of other ones. I was really into Transformers. Anyway, I used to buy trading cards at wholesales, bring them to school, sell them to kids at retail, and it was great. It was a business, except that the school principal, shut it down because she was like, "You can't run a business in second grade." Like, so I got hammered by call it the Fed back in second grade. But fast forward,
The
get
suits.
to the suits. What I really love about investing, we're living in a special time where we're all apes, diamond hands together, ape strong together, and retail investing has sort of become a thing. And this is the Robin Hood, Wall Street bets generation, and it's crazy times we're in.
Yeah, and so I mean that's fascinating. I love that the suits basically. I mean, I don't love it in that sense, but the suits basically shut you down. I mean, the comparison to today is still so valid with investing today. And when people get started these days, what are you recommending to folks? Are you recommending, hey, you got to pay attention to the news, you got to pay attention to what's going on, or is it still, can you just throw your money into an S&P index fund, or are we going to see a big crash coming up?
So the markets are really frothy, right? And so I've been passively investing. I wouldn't say I'm like a particularly good public markets investor for 10 plus years, but I think more recently, after selling Streamlabs, I had money to manage, and I was like, how do I not fuck this up, right? And I didn't want to
Right.
give it to a money manager and pay 2% fees. So it's like, okay, well, let me try doing this myself. So I think we got really lucky with timing. So had about 10 million, actually 15 million in the market at the start of last year, public, and that
Yeah.
turned into 45 by the end of the year. Uh,
Oh my gosh.
so I'm not it's not I don't want to say I'm smart or anything, but I think it was just a lot of luck and timing, right? Like, I think it's been a wild ride, and where the markets are right now really worries me a little bit. It is very frothy. I think anyone with half a brain is going to say, like, these things are trading at like 50, 100, 200, 500 PE, right? When I think back at the dot com, like top of the market, Yahoo and sort of in 99 were like 40 PE, 50 PE. So like we're in sort of new territory here. And I saw two of your videos I really like, Kevin. One was where you talked about going from nothing to like 28 million, right? Like that was amazing story. So
Thank
humble.
you.
American dream, self-made, love it. The second one was sort of your recent video with was it Harry Dent?
Oh, yes. Yeah,
Yeah,
90% crash
right.
coming up.
Yeah. So I agree with him. I think the markets are frothy, incredibly frothy. The question, and there's a big crash coming. I don't know if it's going to be 90, but let's say 50, at least in the tech stocks, right? Which is normal when they're this overvalued. The question is, what do you do about it, right? And sort of what I've done is rather than saying, okay, just sell all, stay in cash, wait till this thing goes down and then get back in. I have a friend who did that. He started doing that in 2016, right? And he's been in cash since then, and
Wow.
he
Oh
hates
my
himself,
gosh.
right? Like he hates
Yeah.
himself. Like this guy had millions in like 3% bonds from like 5 years ago, and so I think timing the market is actually a really bad idea. Um, so what I did was like, look, public markets are very frothy, and it's weird to say this, but they're even more frothy than private markets, private startup markets. So now is actually a good time to rotate from public to private, right? So about 6 months ago, I started doing that, sell or sort of pare back some of the gains in my highest stocks like Fiverr, Zoom, Square. Um, I think those were my top three from last year. Um, so I pared them down, and then we have been rotating into private markets. So it started a thing called poorfounders.com, where we're investing into sort of secondary equities into startups, but also just in early stage funds and some direct investing into startups.
Got it. So when you rode this wave where you grew your portfolio from 15 to 45 and what you were investing just in the public markets, how concentrated were you? You mentioned like Zoom and Fiverr, you mentioned three stocks here. Was it just all in on those three, or did you have a whole portfolio, 20, 30 of them?
Had about, I want to say maybe like, so it was pretty concentrated, about I think 10 to 12 total, not more positions.
Mhm.
And all of them, the way, so I did this with my brother and co-founder. We did Streamlabs together. And the way we sort of went through picking these companies was like,
Mhm.
what are products that we use ourselves that we love, right?
Right.
Um, like if we're not going to, if we don't use it, if we're not customers, we're just not going to touch it, period. And then they have to be products that are so much better than everything else in the market, that they are gaining market share, they're crushing their competition, it's a growing category, and it's run by a founder CEO, right? I think the last one is also
Ah,
really important. So it's run by one of the original founders who's just all invested. They love what they do. They're not like a hired gun type CEO. Not that
right.
that's bad, that can also work, but founder CEOs, I think, have a special sort of ingredient, sort of passion, energy, respect from the team, knowledge of the market. So that's what we did. So we picked, things like that.
Mm.
Um, I think the worst performing stock was probably up like 40%. And then the best performing, I think, was Fiverr, up something like, I bought it at like 30 something, and now it's at 370. Uh,
Oh
in,
yeah, darn
in
12x, you know.
you know,
Uh,
so I didn't know I was going to do that. So like, sure, we picked companies and we made concentrated bets, which is what you want to do if you
yeah.
want high alpha, right? But
Yep. Yeah.
I think we also got lucky, right? Like it's just been a
I mean
crazy
that, yeah,
year.
but I mean that everything, the timing was incredible there. Yeah, and some great picks there. So, you mentioned that now you're rotating out of these public market positions because you're seeing this sort of froth in the market, and you agree with Harry Dent that there could be a crash relatively soon. You agree with his 50% tech sell-off concern. What timing are you thinking? Harry seems to think it's 6 weeks away. What's your take?
I have no fucking idea. Like I don't know. I'm not gonna try
Hello.
to time this. I'm not gonna try to time this
Yeah.
shit. Uh, here, the way I think about it is like, look, the way you lose money is when you sell during a crash, right? And
Yeah.
I'm human.
Yeah.
I'm an idiot. I'm affected emotionally by what happens in the market, just like everyone else is, right? If things
Yeah.
crash 80%, like 9 out of 10 of the people watching this trade, they're gonna sell. They're gonna sell something, and that's how you screw up your returns and destroy your wealth, right? So part of the rationale of there are two reasons for going private, and by private I mean sort of private investing into startups that are not yet public specifically. It
Mm.
could be any kind of private investing into businesses. They don't have to be tech startups. You could invest into restaurants or retail. Right now they're getting crushed, so now's probably a good time to like either buy some of those or invest into them as well. There are two reasons to get into it right now. Number one, the
Mm.
valuations are less frothy than the public markets, right? For example, I am investing into this real estate company that
Yeah.
is sort of a tech platform, but they did 20 million last year in revenue. They're gonna do 100 this year, right?
Wow.
And I'm buying into them at $100 million valuation, right?
Okay.
That's the company did
One
20 last year. They're
one
doing
times
100.
multiple.
I mean,
Yeah.
yeah, right. Like that's an outlier, but
Can you say who this is?
I can't, not yet. I mean, it's not public yet. I will be able to in a few weeks once I think they announce the round. But
So it's some kind of like a REIT platform or whatever. I mean, just generically speaking, is it something like it's just something basic like a real estate fund or something?
it is a retail. They are trying to actually, if you want to invest, the round's still open, but they are trying to uh, uh, democratize and sort of reduce the amount of commissions that real estate agents charge every time
Ah,
there's a buy or sell transaction, right? Like, I mean, does it make sense to you that there's a 5 to 7%? Sorry, I know you're in real estate, but there's a giant commission there, right? So they're just trying to reduce it and give more money back to the consumer. Um, and they work
and they're
with
trying to do that with like technology or something or what?
Yeah, so they've got a marketplace where real estate agents can sort of uh, compete with each other, offer lower
Mm.
prices to get new leads and customers, right? So if you're a real estate agent, you can sign up on their site, and
Mm.
they will actually send you all the customers, and you can compete with other agents for lower pricing. They're in very few markets right now, but uh, um, I think so. I mean, just as an example, right? I've done a few other. This is extremely low, but I think in general, earlier stage startups are less frothy. That's number one. Number two is when you invest in the private markets, you are stuck whether you like it or not. You're stuck
Mm.
in that investment, right? So even if the broader market crashes 95%, like Harry says, uh, you're stuck. You can't do anything, right? So the average time you're going to be in one of these, if it's a VC fund, is going to be 10 years, right? So you're going
Yeah.
to compound. Most of these are not, you're not going to lose all your money. Worst case, it'll compound at 10% or 8%. Great. Sort of good case, it'll compound at 20%. That's the range. But basically, it's an illiquid asset that locks you in for 10 years, right? So
Got
if
it.
there is
So
a
what you're
so
saying is like startup investing is something that's actually kind of interesting because, you know, I mean, what you said here was so I bolded this. You said if things crash in the market here coming up, 9 out of 10 people watching are going to sell just because we get nervous and oh my gosh, the values are going down so quickly, so we sell and that screws up our returns. And one of the benefits maybe of like startup investing or private investing versus public investing is you can't sell when you put money in. But I mean, is this accessible to the everyday person watching?
uh, it should be, and I wish it was. I think it's starting to move in that direction. There's with the Jobs Act and I think Reg CF, there's crowdfunding now that allows startups to
Right.
raise up to $1 million from pretty much anyone, right? You have to be careful that most of the deals are crap. So you really have to be careful, especially in crowdfunding. Look for higher quality deals, traction, management teams that are phenomenal. Uh, but if you are an accredited investor, right? And by an accredited investor, you got to be somebody who's making over 200 grand a year in income or you need to have over $1 million in assets, net investable assets. So like you would qualify, right? And maybe like
Right.
20-30% of the people here would qualify. Um, you can actually invest in startups directly. There's you can go on platforms like AngelList, Angel.co, right? The founder Naval is a good friend of mine. They have these rolling funds where startup leaders and veterans have set
Oh,
up
there
like.
you go.
Oh, are we back?
You're good. You're good. Sorry.
Okay. Sorry, I'm on Wi-Fi.
So
I don't
sorry,
know
I interrupted you right on AngelList, where you were saying that you can basically, if somebody wants to invest in startups, AngelList, for example, is a way that somebody can do it. And you believe that these like you mentioned that most crowdfunding deals are crap. So how does this differ from finding like other deals like these startups to invest in through I think Kevin O'Leary has one as well where you can invest in startups, right? Kevin O'Leary's I'll look it up in a moment here, but he's got one too. Go ahead.
So Start Engine. I've only played in the accredited investor space. Crowdfunding is so new that by the time it came out, I was an accredited investor. I recommend AngelList, and particularly within AngelList, something called rolling funds. So a rolling fund is basically, think of it as like a mini micro investment fund done by like a startup founder. Usually they're already working in another startup, but they set up a fund and you can put small amounts of money in, like 5 grand, 10 grand, 20 grand, and you do it every quarter. Um, and that gets deployed into a bunch of startups, right? So it de-risks. It's kind of like taking an index approach or a mutual fund approach to startups if you don't want to do direct startup investing. But if you want to do direct deals, there's like thousands of deals every month on AngelList. Like, I think you could just close your eyes and look for deals here. I think you'll get great deal flow. There we
Oh,
go.
that's interesting. Yeah. So look at this, deal by deal. So this is where you can review deals individually if you wanted to, and this is where you can. It looks like just invest it. Diversification, like an index fund. Yeah, that's interesting. Minimum of $50K here, minimum of $1,000 here to invest. So there are ways. I mean, it seems like regular folks would be able to invest here. This is, I know, Start Engine. That's this is where you almost have to pick your almost sort of individual companies here that you want to invest in. Isn't there a lot of risk in doing this stuff though? I mean, like, what if let's say you picked a deal individually here? Like, I don't know, just because there's one here. Like here, what is this? Fully autonomous security robots. Here's someone from Mountain View. They got, presumably the founder right here next to his autonomous security robots. $500 to invest, $10 a share. They got 4,800 investors, the $447 million valuation. Is this safe? These kinds of things for people to invest in? It seems scary compared to like just YOLO everything on Tesla.
I've actually seen one of these robots in Palo Alto at one of the malls. I didn't see them again. I think they did a pilot, didn't come back, so I think that's not a good sign. But I would stay away from looking at deals in this way. I have no idea if this company is good or bad, but the way I do it is sort of define your circle of competence, and it should be something that you know, right? Like, for example, with Streamlabs, we built streaming tools for live streamers, right? It was the most widely used set of live streaming tools on Twitch and YouTube in the gaming space. So I love content creators, right, of all variety, shapes, and sizes, and I know that space. So that's great. So recently I invested in something called Story Video Creator, StoryCreatorApp.com. Super early stage, right? I was the first check-in, and they're building a video editor in the browser, right?
Oh wow!
And so I think if you're going to invest directly in deals, only invest in stuff you know and where you feel like you can help them with the market, with customers, with partnerships. You otherwise it's probably better to go through a fund where you put in 10, 20, 50, 100, whatever, and the fund diversifies and invests into 20 to 50 different startups for you.
So somebody watching this today with like, $10,000 that they want to invest, you're thinking because the public markets are so frothy, and I mean, you could ride the wave through a crash if a crash happened, more sense to try to invest into some kind of a fund that's private, that's investing into many of these different startup companies.
I think so. I think here, let me send you the link. This is actually really worth looking at.
Okay.
Where are you?
Do you have to be an accredited investor to invest in this angel list?
Yes, you do.
I guess we could find that out. Oh, okay.
You
Got
do.
it.
For the most part, you do.
I think with like Start Engine, for example, I think there are some places you can invest if you're not an accredited investor. But then again, like you say, you got to pick something that's $500 minimums. You got to pick something that you got to be familiar with and then have a lot of belief in. I mean, somebody left a comment here that 95% of startups fail. Isn't that concerning if you were throwing money into a bunch of different startups? Like, how do you concentrate, right? You were able to concentrate in Fiverr and Zoom because you used them and you believed in them, and you turned $15 million into $45 million just in this pandemic year. But how do you concentrate in the startup world? I mean, there are thousands of these startups. You just put a little bit everywhere and hope one hits?
I think stick to what you know. Honestly, it's I'm doing exactly the same thing I did in the public markets in the private markets, right? So I think develop a thesis and stick to like an area. Don't kind of like spray and pray all over the place. That's literally the worst thing you can do, right? Like, do not spray and pray. Figure out, okay, I like content creators, or I like crypto, or I like DeFi, or I like real estate prop tech, right? Like, for example, like there's tons of interesting things happening in real estate. And you find deals within those areas, right? And try to say no more than you say yes. So I just shared a link with you. I think you can browse just to get a flavor of like, yeah, I'm not recommending you do this. Obviously, everyone should make their own investment decisions, but you can just browse and see like what sort of things are happening. And this is fairly new. This is like 6 months old. So this is changing the way people can invest in startups. It's not completely open to everyone yet, but it's really getting there, right? So
where did you send the link? I do want to pull that up.
Oh, it's on your StreamYard. It's in the browser here.
Oh, I'm sure there's private chat. Oh, look at that. I've actually never used this before. That private chat function. Thank you for that. That's hilarious. Okay, let's see here. Okay, so this is angellist.com/rolling is what you said. Invest in rolling funds. So what's that? There it is.
These are think of these as like mini mutual funds, right? Run by
there we go.
Startup people. So if you're new to startups and technology, it's really scary, and again, this is incredibly risky. So do not invest more than you're willing to lose. But essentially, it is a little less risky than doing a lot of direct deals into startups, right? So you could pick operators and fund, managers here, really, based on what they've done in the past, what they like to do. You can read about them, and you could put in 10 grand per quarter. It's a subscription model, so you can basically say, okay, I'm going to take like certain amount of money out of my paycheck every month or every quarter and put it into a fund.
Got it. So like here's let's go to, I don't know, let's go to, what is this one? This is okay, so here's one that's somewhere around maybe like $1,500 a month or whatever. So what you're saying is these rolling funds, they make you put in, and you have to invest for at least 4 quarters, so a year, They make you invest. So $20,000 is here, a late stage fund. Footprint Coalition Ventures late stage fund. Here's the Iron Man looking dude, and talks about his audience and everything, and so now you can invest with him, and he's going to go put it somewhere, is what you're saying.
That's right. And he's going to talk about where he puts it. And it's a marketplace, right? So you can pick the type of things you like. And instead of investing like tons of money per fund, these are very small amounts. So you can break out and try out a bunch of different managers and approaches. It is a less risky way than doing direct startup deals. I'm totally okay with doing direct startup deals in companies I like, but obviously that's not for everyone, but it does lock you in.
I've never
the point
heard of
is it'll lock you in, right?
And so you have less fears about investing in something like this than investing in the public market right now. I mean, it just seems like, I feel, for example, myself, I feel so comfortable with Tesla, for example. Yet here, this is okay. They've got an investor deck, like probably what's it called? A slideshow or something to get us all excited about what they're investing in. But so here we give them, say, $20K. They take some kind of fee, I imagine, after we get our money back, the carry. But why? Like, this feels so foreign and so less liquid. Well, it's certainly less liquid, but less. I don't know. Like, what am I missing? I'm just not as jazzed about sending it over to somebody compared to like having control and just swipe up on Robinhood and throw it into Tesla. Am I missing something? Is it because of that crash?
That's the point. I think you want to be illiquid. You want your money to be locked up behind 3 different layers of lock and key that even if you wanted to sell and you're like, sell, you can't, right? And you don't have to do that with startups, right? You could do that with other potential illiquid asset classes. So if you take real estate, for example, you get in at, you've talked about, you like doing fixer-uppers and sort of renos. Right. You could totally do that there, right? You get in at a property that at a reasonable price, reasonable valuation, and you just sit on it. It is more illiquid. Like, it takes more time to do those things. From the time you get in to even if you wanted to sell, you're probably looking at least 18 months, right? So my point is, like, the more illiquid it is, the better for you in the crash that's coming. Does that make sense?
Got it. Yeah, it does. So in other words, you like these, like here, for example, so obviously Robert Downey Jr., he's launching this fund here in Q1 2021. How it'll work, we focus on building a massive engaged audience of consumers, investors, and citizens. So basically, he's leveraging his name recognition as an actor and somebody who's going to take investors at the start of each quarter. Minimum commitments $20,000. I actually don't even know if you have to be an accredited investor in this. It says, open to accredited investors. Okay, so this is open to accredited investors, and they basically share their vision for investing. So is it all of these different funds? I guess you have to be accredited for all of them. Is that it?
For these ones, yes. Okay. But they're going back to crowdfunding. There's for example, there's this startup Gumroad. It's in the creator space. I don't know if you've used it, but creators use it to buy and sell sort of digital merch, and pretty cool. Run by a founder who's very active on sort of Twitter and Clubhouse, and he's sort of become a creator in his own right. So they're actually planning to do a crowdfunding campaign that is only open to their own creators, right? So if you are on the platform, you're going to be able to buy a small piece of equity in the company that you're using every day, the platform you're using to run your business, which I think is pretty darn cool. And I think there's going to be a huge wave of platforms and startups over the next couple of years that will leverage this idea of turning your customers into shareholders and stakeholders as well. Uh,
Huh.
Particularly for content creators, right? So I think content creators are just so underappreciated and still not like completely understood. Um, so what is I think about to happen is sort of a marriage of content creators and startup operators, um, and bringing the two together as stakeholders to really sort of uh, you know drive platforms forward.
I mean, that's interesting. So I wonder then if I mean then we might see a whole lot more opportunities basically for maybe the investor who's not accredited yet to get into these startup opportunities. I mean, is it something where would you say to the public investor right now that, hey, it's maybe it's a good time to reduce margin. Maybe it's time to consider looking into investing into other opportunities where maybe your money is locked away. I mean, usually when we hear money's locked away, we get nervous. We don't like that. We lose
Mm-hmm.
control. What do you say to sort of the everyday investor?
That's a great question. It is. I've spent like 20 years in startups, right? So I don't have that fear anymore. Like that's been like taken out of me. I don't worry about illiquid things, um,
Okay.
as long as they are the right things. But I can understand that it is scary to go from like a totally liquid, like it's in your app, you can buy, sell, take your money out, put more, to go from that experience to anything that is illiquid. But generally speaking, if you look at investing, illiquid assets um, do tend to produce higher alpha than liquid
Huh.
assets, right? I think the
And is that
last
just
year.
because people are buying and selling, or they get emotional, or is there a reason you get these higher returns in illiquid assets? And does that mean we should be focused on things that we can't sell if we want to?
I think so. I think so. I think compounding kicks in when you're forced to be locked in. Like imagine if we had all invested in Tesla 10 years ago and we
Right.
couldn't sell, right? Like
For 10 years.
how many idiots have sold out of Tesla too early, including this one,
Yeah.
right? Like
Oh.
me, I bought Tesla at 200 pre-split like
Uh,
4 years ago,
yeah.
and it doubled to
Yeah.
like 420 or 450, and then Musk had that tweet where like 420 whatever, and I'm like, okay, this guy's nuts. He's on Joe Rogan. He's smoking crap. He's literally tweeting about 420. The SEC's after his ass. Like, sell this stock, right? And I sold it pre-split and it doubled, and I was like, yeah, I'm smart. I doubled my money. But had I been locked in, it would have 10x'd, right? So
Right.
so one of the biggest mistakes in investing, I think, in general, is selling your winners too early, right?
Yeah.
Across
Yeah.
any
But
so
how do you blend selling winners too early with maybe being too over diversified? I mean, like if you've got, say somebody has $100,000 portfolio, but they've got $1,000 that because they put $200 into a stock that turned into 1,000, so it 5x. It's such a small portion of their portfolio. It's not really going to move the needle on the whole portfolio. Is it better to concentrate down, even if you have some winners? I mean, like you had mentioned, 10, 12 positions. What's your take on that concentration there? Kind of going back to that initial view. What's your take for sort of the average person?
so I think, like, look, you have to have a high degree of conviction if you're going to do any kind of active trading, right? If you don't have that, just stick to an index and forget about it, right?
Okay.
Um,
Yeah.
but I do think we are, given how frothy everything is, the next 10 years the stock market is going to have lower real returns compared to the last 10 years, right? So if you're purely doing indexes, like, it's going to be tougher to produce the same kind of real returns adjusted for inflation. uh, so I do think, from a macro environment, it's better for active investing. uh, so Peter Lynch, my one of my favorite investment managers. People love Buffett. He's great, but I actually really like this book Peter Lynch put out. He was Fidelity's star manager in the 80s and 90s. 35%, like I think annual return over 25 years or something crazy
Wow.
in active investing, public equities. And so he has this great book where he talks about the gist of it is like, look, as an everyday retail investor, how are you actually going to outperform the suits and the experts with giant computers and physicists and high frequency trading and like billions of how the f are you going to outperform those guys, right? We're not more patient than them, we're not. So the only real advantage you have as a retail investor is to buy companies that you use. You're the customer and you use their products and you can spot trends and you see them winning market share before the funds or the broader market realizes, right? So for example, like say 2 years ago or 3 years ago, you were, you're a woman and you start wearing Lulus, and you see all of the sort of other women at sort of the fitness studios buying Lululemon, right? And they're going all in, and then guys start buying it, and you are the customer. I wasn't that, but that would have been a great time to buy that brand, right? Buy the stock. So if you use the product, buy the stock, and be early. I think that's the way to win with active trading.
I mean, that's interesting because there's so many companies that are like, oh, here's this company like the SPAC Holicity. Oh, they're gonna take this space company public that wants to launch 300 satellites a year, and here's a pharmaceutical company that does something totally unrelated to me. Like a lot of us, when we look at some of these stocks, we're like, I'm clueless, know nothing about these things, or like, oh, I'm going to go buy this lithium miner. Is that a mistake to look at those sorts of companies, or is it just harder because you don't have that competitive advantage over maybe the the hedge funds?
I don't do it. That's not my style. Maybe Wall Street bets, diamond hands, YOLOs, whatever. People have figured that shit out, but it's not my style. Like I feel like I'm not in my circle of competence. I just don't know what's going on, right, with the company.
Right.
Look, the stock price and the business of the company that you're buying are two separate things, right?
Okay.
Those are two fundamentally different things. So when you buy stock into a company, you are a minority partner that owns a small piece of the business, right?
Okay.
You cannot control what happens to the stock price. The markets and macroeconomic factors, the Fed, depressions, crashes, boom, but you don't control any of that. What you can control is you can buy into a business that is winning rather than losing. That's the most important thing, right? And if you look at the long-term history of the stock market or any stock, stocks are influenced by the only long-term overriding factor that affects the price of a stock in the long run is earnings of the underlying business. So if the business is winning and you've bought into a business that is winning, that's all you can control, right? You don't control what happens to the stock price. So
in other words, if as like a retail investor, it's so much easier for a retail investor to know if Apple is winning 5 years ago because everybody's got a freaking iPhone, for example, or it's so easy to know that the Lulus are going to be winning or the Teslas are winning because they're popping up everywhere. It's easier to see that as a retail consumer, where if we spend too much time trying to beat the suits, so to speak, at their own game, what do we know? And then we maybe go into trades that are low conviction trades just because we think we see something, but then we get scared out of them and we lose money. Whereas if you buy something you believe in, you don't have to worry about the fluctuation so much because you know it. You know you're with the trend on that, and you know it's a winning company. That's sort of what you're saying, huh?
Exactly. In fact, I think my biggest regrets in investing are when I have not done that, right? So, story back in 07, 06 or 07, within my group of like startup friends and co-founders and founders, I was one of the first people to go from like a Windows laptop to a Mac, right? And they all
Okay.
laughed at me. They're like, "What is this? You're an idiot, blah blah blah. Nothing runs on
Sure.
it, you know." And remember that was Steve had just, Steve had come back, and Apple wasn't as big, and like you were coming out of like the shitty Mac days, right? Like the new
Yep.
OS 10 platform was newish, and I got in and I was like, oh my God, this is the greatest thing ever. I'm going to love this laptop. I'm going to kiss it. I'm going to hug it. I love this thing. And I kept it for like seven years, right? And it was amazing. It was,
Oh my gosh.
and I was an idiot. Like, this is one of my biggest regrets is I loved the product so much. I would tell everyone to buy it, use it. I got all my friends to buy Macs, and then eventually everyone bought iPhones. But, I didn't buy the stock. And
Ah,
my biggest regrets are things like that, right? Like Tesla, I bought a Tesla and I bought the
yeah.
stock, but I sold the stock too early, right? Like I didn't like stick to my convictions. Like this is a phenomenal product, and the fact that most people think electric cars are impractical or whatever, that's just great, because that means it's still a very small part of the market, and over the next 10 years it's going to go from like 3% of the market to 50% of the market. I should have just held on to it. It's a phenomenal product. Like everyone who actually has driven a Tesla or owns a Tesla will tell you that they just like 95% of them will never buy another car again for the rest of their lives. Like it is incredible, right?
Yeah.
It feels
Yeah.
like the future.
I love what you just said, because it's something that I look for, and I think it's such a wonderful thing, but it's so understated. And I really want to highlight what you just said. You said people think electric vehicles are impractical, and that's great, because in other words, it means you're early on this transition, because when there are so many doubters, the price is lower than what it's going to be when everyone's a believer in it. And I
Exactly.
want to carry
Mhm.
this into Bitcoin. Is Bitcoin potentially that? Because I talk to people about Bitcoin and they're like, don't understand it, don't care. And I'm like, well, you will one day. you
Mhm.
know?
Mhm. Mhm. So I'm actually thinking about um, Bitcoin. Super interesting. I'm super bullish. I think the best thing I did with Bitcoin, I bought some Bitcoin like 5 years ago. The best thing I did was I forgot about it. I didn't touch
Nice.
it. I forgot
Mm.
where I had it. I didn't even look at the price, nothing. And, I think there's a world where like 10 years from now, each Bitcoin is $1 million. Um,
Oh my God.
um, there's going to be a point where like, as this crash happens and people freak out, and, initially the price will crash, but, uh, you know, when there's a change in sort of a macroeconomic change in the global financial system, who's going to be the world's reserve currency. We're devaluing dollars, but we don't really like anything else. Like, gold sucks. Like, so even if Bitcoin doesn't become that, I think central banks and certainly corporations are going to allocate some part of their treasuries, like call it 5%, 10% to
Mm,
Bitcoin instead of just
mm.
cash or gold. And when that happens, I think there's a lot of room for crypto to go up. But you really have to buy and forget, like forget that you own it for 10 years. Um, um, don't forget your passwords or whatever. That's the worst thing with Bitcoin. There are all these crazy stories of like 10 or 20% of the people in Bitcoin, just they get lost every single year. So the supply is not
Oh,
actually going up; it's actually decreasing every
yeah.
year because people people lose their coins.
Oh, that stresses me out. Where are you buying Bitcoin? I know I feel like a noob when I say it, but I had money in Robinhood, and that's what I used to buy it. I know people get mad at me for saying that, but where are you buying it?
I think, look, Robinhood's fine. I think these apps are really user friendly. Cash, Square, Cash App is great. Um,
Hmm.
Coinbase or any of the exchanges are great too. Um, um,
But you're a
uh,
you're bull. You're bullish on
oh,
Bitcoin.
huge.
Yeah.
I think like,
What
look,
you think it's going to crash though?
Look, I bought Bitcoin when it was like 2 grand or like a grand, 2 grand. It went up to 20, and then crashed back to like 5, and
Right.
now it's at like 47, right?
Right.
So um, I think I think 10 years, 100%, this is going up many times higher than what it is today. But there are going to be really terrible times in the middle where it will crash 90%, and you just have to not sell. Like, um, so it's one of those things where, like, if you can buy it and forget for 10 years, you are going to make a killing on this. Even PayPal has it now.
So,
Yeah.
would you buy it at these prices, or would you try to time in, or just average in?
Just average in. I think as
Okay.
long as you, as long as your thesis is 10 years, your time horizon's 10 years, I would buy these prices. If your time horizon is like a year or 2 years, then I don't know. It's really hard to say because it could go to 80 and then go back to 15. Like Bitcoin is just crazy.
Yeah, I mean, there was you had mentioned that this could go to $1 million. I mean, that's a big statement there. Bitcoin, $1 million a coin. Is this? Are we going to look back and laugh at this in 10, 15 years and go, yep, wow, not only did it go to 1 million, it went higher? Or are we going to look back and go, well, that was the biggest scam of the century, Bitcoin?
I think this is going to $1 million, or thereabouts. And fundamentally, the supply is actually decreasing of actual, because people lose their coins, they get hacked, they get stolen, and it's going up at such a slow rate now. The mining, right? It's
Right.
fundamentally, crypto is fundamentally being used to bypass capital controls today. Like, that's the number one use case. And we don't understand what capital controls are, being in the US, because we're sort of the center of the open market sort of world economy. But in almost every other country, right? I grew up outside the US. I moved here when I went to college 20 years ago. But um, most countries have something called capital controls, right? Which
Right.
means, like China, right? They limit how much money their citizens can take out of the country for any purpose. Like, say you want to invest something somewhere, like, it's very difficult to actually get money out of those countries because
Hmm.
they control, they're trying to control the rise and fall sort of their currencies, right? They're trying to peg it to the dollar.
Right.
um, and so they're worried that if it's a free for all, people are just, maybe the countries are so shitty that everyone just wants to get the hell out, right?
Yeah.
Most of the world is in that situation, right? Like,
Jeez.
so if like, most people would just get their money out and invest in the US, or Europe, or maybe China, or whatever. Um, so capital control. So crypto currently, that's the number one use case. Is it bypasses capital controls, provides a certain amount of, and anonymous sort of transfer trading. Um, um, but I think more and more it is turning into a reserve asset. Right? It's not actually a currency. It's not really used for any
Mhm.
kind of sort of transactions, but it is turning into a substitute for gold. Um, Imagine, 10 years ago, I used to think, gold is a good hedge. Everyone should put 1% of their money into something like gold, 2%.
Yeah.
But gold is a pain to buy and keep, man. Like, it's a huge pain. Like, where are you going to store it? Like, are you going to go get a bank
Right.
vault, or are you going to buy an ETF and pay fees every year? Or, like, how you can't take it with you, right? Like, you can't put
Yeah.
it into a suitcase. Say you're fleeing your country and going to another country, there's war and some revolution, terrible things happening, which happens all over the world. Is a really messy place, right? So people can't fill up their pockets with gold and leave, right? So what's happening in Venezuela, and South America, is some of these countries, people are actually putting all of their net worth into Bitcoin, packing up their bags, going on foot across the border to a different country, and Bitcoin is helping them transfer. their money and assets in a discrete, compact way. Like you can hide it on a USB drive, right? You can hide your private key on a piece of paper, and put it into your pocket, right? Like nobody. There's so many ways to transport any amount of money through Bitcoin that you can't do with gold. So it's just a more usable substitute.
Wow. I mean, that's powerful here because, in the Harry Dent talk, he actually mentioned that he thinks he was bullish on Bitcoin. He thinks that there could be a sell-off, but that we would see almost kind of like what you're saying, this explosion afterwards. And this was almost almost completely counter to Peter Schiff. I don't know if you saw that, but you probably know about Peter Schiff, very, very anti-Bitcoin, a bull. Gold bull. Why such differences of opinion? Does that mean we're in the right place and we're investing in something early before somebody like Peter Schiff, comes to enjoy Bitcoin, or is he seeing something the Bitcoin bulls aren't?
For the life of me, I cannot understand how you can be a gold bug and not be a bull on Bitcoin. I just don't understand. So like, I think Peter, maybe he's just a boomer. Maybe he needs to check into a nursing home. Like he doesn't get new technologies, right? Like I just don't understand the fundamental reasons why you would buy gold are more or less like a lot of the same reasons you'd buy Bitcoin, right? And the groups of people who buy these things are, you've got like the under 35, under 40 crowd on Bitcoin, and then you've got the over 60 crowd on gold, and they just refuse to like even look at Bitcoin. But they're really the same, honestly. They're very similar. The reasons you buy them are very similar. So, I mean, I think if Peter Schiff was maybe 20 years younger, maybe learned to code a little bit, or like came from a world where was a millennial, or whatever part of the Robin Hood gen, I think he'd be bullish on Bitcoin too.
Wow, got it. Now this move with Tesla, putting $1.5 billion in, their stock moved up initially. They sold off 10% since then. Is that just the future? Is Elon just once again ahead of the pack? Or is this stupid? Is this going to create a mess in gap accounting? Is this too complicated for hedge funds to understand, so they're going to sell out of Tesla? What's your take on that?
I don't think Elon would worry about something like gap accounting. I mean, that's not going to stop him. Honestly, he's gonna hire like a bunch of accountants that are smart enough to figure it out. Look, I mean, the way he builds his cars, like the yoke steering wheel, you think he cares about gap accounting?
Good point.
Like if someone can put a yoke steering instead of like the round staring into a car, like they're thinking far into the future. So no, I think he's ahead of the curve. And look, he didn't risk the company on it. It was only 8% of their cash, right? So and I think it's gone up like for 50% in value. So it's hard for somebody to even come and make the case like you did the wrong thing, Elon. You're hurting shareholders. Clearly, it's 8% of the cash. Not a lot, and like, look, it's gone up in value, and he's ahead of the pack. So,
right,
Square put 50 million into Bitcoin like 6 months ago or 3 months ago, right? Tesla wasn't the first. So I think they're smart. They're ahead of the curve.
There we go. Got that steering wheel. So you're saying you like the steering wheel?
Oh, I put a deposit down for one of these. I love it.
After the steering wheel announcement or before?
after the steering wheel announcement.
Oh, good. Oh, you're gonna get one of the new plaids then?
I have a kid, so I have a Model 3 right now, and it's the non-performance version, and it's already too fast for my 2-year-old. He's like, Papa, can you go slow? Like, so I don't know if this is quite ready to be a family car, because even now, like half the time I like turn down the power and I drive it in chill mode.
Chill mode, yep.
Yeah, but it's so
I do that
cool.
too, actually. Yeah. Well, the if you put the car on autopilot and you put it on chill mode, it's way less stressful, because if it's on sport mode and autopilot, it can be powerful. But oh my gosh, okay, so you're supportive on Bitcoin. So you're really worried more about this tech sell-off and people maybe selling out as things fall. And so you're looking for opportunities where you're locked into these investments, and you're really looking for things you understand. So now I do want to use this as a conduit to talk about stocks here, because you kind of mentioned, I mean, you said that you don't, well, no, you mostly implied that the investing in, you prefer, let me clarify my thoughts. You prefer investing in winning companies. So you kind of implied you don't really like AMC and GME. I'll let you clarify on that. You also mentioned that you'd rather invest in concentrated companies that have the earnings, which is kind of also a little anti the GME and the AMC. Am I right to say you're trying to stay away from those? And then let's talk about stocks.
You're right. I did not buy GME. In fact, what was happening, I was like, this is going to end in tears. Even though, I love the community. I'm on it every day. I think Wall Street Bets is great, and communities like that, like empowering retail investors. Like, look, if you're going to take up a crusade against the hedge funds, that's all fine and good, but understand like the reason why you're buying something. Like, you can either be buying a stock or you can be buying a business. Right? Those are two different things. Okay. GME is a dying fucking business, right? AMC even more so. At least with GME, you can make the case. They have a new, the Chewy guy is in there. He's going to turn it around, make it an all digital thing. So maybe there's a turnaround story here. But when you buy shares, you are buying a piece of the business. You're not buying the stock price. So it's just, GME never made sense to me, as much as I was rooting for, the movement. What I'm doing with stocks is, it started off as a passion project. I want to build tools for myself and people like me, retail investors, the Robinhood generation, apes are stronger together. We're starting off with just a daily email alert that you can customize and say, I want these 10 stocks, figure out what's happening with them every day and send me an update. And then we're going to build more and more tools in the future. But it's just a passion project, really small team, myself and a couple of guys. I'm actually looking for, co-founders, particularly people who like to talk about this stuff, stocks, the markets, the Fed, what to buy, what to sell as co-founders. Because I think startups of the future are going to be built not just by coders and builders, but by people who are out there talking about, creating content, talking to users every day. They have a network, they have an audience. So I think the startups of the future are going to be built differently. So I'm looking for co-founders, maybe get a bunch of content creators, people like you, Kevin, would be great. I have some crazy ideas I want to run by you also. I don't know, just a sounding board, but I don't know. One of these seems obvious to me. I don't know why nobody's done it yet. When I look at rolling funds and I look at these paid newsletters that people do, and obviously funds and mutual funds and hedge funds. I want to run a few ideas by you as well.
Yeah, absolutely. No, I appreciate that. No, this is interesting. We'll definitely. Yeah, exactly. Yeah, you got this up. Okay, so you've got Stonks.com is a newsletter. It's something where your goal is to right now build an audience with by providing stock insights. Whether this is, is this like, what's the difference between this and what is it called? Stock Twits or something like that? That I don't use it. I should, but they send out the little updates. Stock Twits. Yeah, that's it. Stock Twits. Yeah.
Stock Twits is great. Howard is a friend. The founder. I use it. I get the newsletter every day. This is, but all of the other newsletters are written by people, right? So there's a team that writes one newsletter, and 1 million people get the same newsletter. That's how everyone else is doing it. Stonks is creating a different newsletter for each person every day based on the stocks that you care about, right? So, for example, Kevin, say you like EXPI, right? Or you
Yeah.
like, Tesla, right?
Yeah.
Or you like Etsy, right? Like those are some of your
Right.
holdings. So, hey, I watch your channel. I wasn't just bullshitting, right? I actually watch this stuff. I like this stuff.
Apparently, you're nailing it.
So you can go in and say, okay, I care about these three companies. And so Stonks is going to find the daily news, right? The daily headlines on all those companies, tell you price changes, your portfolios up or down, analyst ratings, funny memes, because you don't want to be boring as hell, right? Like you don't want to read a wall of text every day. Just meme the shit out of it. And it'll find the best things from Reddit for you to look at based on what you're interested in. It'll tell you when like search traffic or web traffic to these properties like Tesla.com or Etsy.com is going up or down, so you can get alerted like 3 months or 6 months before this impacts earnings, right? And all of this is free. It's completely free, and we're just having fun with it. We're not quite there yet. I think the newsletter sucks and it's really broke. But I'm trying to build something I would use and people would use and have fun with.
I mean, somebody here wrote, sounds like an awesome algorithm. I mean, that's really what you're doing is you're creating, you're teaching algorithms to, maybe a meme algorithm, maybe a Reddit algorithm, maybe a specific stock algorithm to provide maybe most salient news of the day in a nice condensed summary that's actually customized for every individual, but then also automated, which then also opens the door up to, in the future, monetizing that by putting in custom guided ads into the newsletter as well to continue funding the expansion of the algorithm, which actually creates this really fascinating newsletter, like you said, that just doesn't exist. Am I right about that?
Spot on. You nailed it.
I mean, that's awesome. No, I think that's amazing. Because I mean, you could use sentiment trackers too, which aren't that hard to do, and really build that right into your platform here. I mean, that's really cool. What I want to know is how you guys got the domain.
I bought it last year, and this is before the Wall Street Bets was like a million users. I think it's at 9 million today. I was just like, dude, this is great. Like I have so much fun with this stuff. I'm an investor myself. I don't know what I'm going to do with it, but hey, this is great. And we'll build something eventually. We'll figure it out. So, but this is so much fun. I want to spend the next 10 years of my life in this space, and like stonks.com is so much more fun than like bullshit.com, right? Like, so it cost me, I think 20 grand to buy the domain, but I just got it and figuring out what to do with it. On that note, actually, question for you, Kevin. One of the crazy ideas I had recently, and I've run this by a few friends who do public market investing. They're like, yeah, this seems obvious. Why hasn't anyone done this yet? Is you have a Discord server, right?
Yeah.
And you have people can sort of subscribe to be in these groups, right, and get your trade alerts, stock alerts, and a bunch of other people on Twitter and YouTube and TikTok are also doing that, right? We're fundamentally, like, as a fan, like I watch your channel, right? Like what I want is to invest in the things you are talking about, right? Like,
Sure.
But sometimes like it's too much work to like join these servers and like follow all the things that are happening. Like imagine you're part of like 4 servers and each of them, they're publishing 3 trades each per day, right? Like how are you as a fan or as a retail investor, how are you going to take the time to kind of sort through? So here's the idea: micro ETFs for content creators.
Yeah.
So you open up your Robinhood.
You mean like a company that can create these, is what you're saying?
Correct. So imagine somebody opens up their Robinhood and says, I'm going to buy the Meet Kevin ETF. And that automatically does all the trades that Kevin's doing. and so you can basically invest in his portfolio.
Yep. Yeah. I mean, I think, gosh, I think the issues with that, the problem. I mean, they're not hard hurdles to overcome, but you got to be registered broker, SEC licensing. I mean, the fees are insane just to get registered, listed on the stock exchange. I think in the future, I could see this being the future in 5 to 10 years. I don't know that it's close. I mean, I guess 5 years is kind of close, but I could see that kind of future. I know a lot of people would love that, but yeah, I mean, right now it's almost cost prohibitive. I feel like somebody would need $100 million under management to even make a tiny profit. But in the future, I love the idea.
Biggest barrier. That's the biggest barrier.
Yep.
It's the fees and the regulatory bullshit.
Yeah.
But I'm trying to find a way to reduce it, like cut it by 90%. So let's see.
If you find a way to do that, hit me up. That's awesome. That's freaking awesome. So you mentioned earlier, and I want to touch on this because I think it's so important for so many folks watching, and it's sort of along this line too. You've got a Cathie Wood who's she's kind of what you're describing here. Somebody very popularized. She's an active fund manager, which means she's actively buying and trading based on her company's opinions and research. She is very anti the index fund. She believes the index fund is oversaturated and misallocates resources to companies that don't deserve them. When you buy the S&P 500, you're buying more cigarette companies than you're buying Starbucks, and I think you're drinking Starbucks there. So if you were to buy the S&P 500, you'd be investing more money into cigarettes than you would be into Starbucks. Tell me a little bit, are index funds, are they dead? Is this passé? Is everything got to go to these active funds like the Cathie, or what's your take?
That's the $1 billion question. I love Cathie. I think this idea, this micro ETF for creators idea, is really inspired by Cathie because I invested in her fund last year. That was one of the other larger investments I did, and she's had an incredible run, right? And I think I love the things she talks about. If you look under the hood, her themes of disruption, innovation, what she's basically saying in one sentence is invest in businesses that are kicking ass. Like, they are destroying their competition because they have technology, they have disruption, their products are 10x better than their competitors. And so they're like crushing and winning market share month on month. That's what she's saying, right? So so I love that. I think the question is always the stocks that she has, most of them are now pretty overvalued, right? Like, they're pretty frothy. Like, Tesla is 9% of her fund, 9 point something, I think. Roku, Square, a few genomics companies. Most of them are like, you wouldn't call her fund a value fund, right? Like, it's like the opposite of the Warren Buffett fund. Not anymore. So what's changed is the companies that she has are still kicking ass, right? Their businesses, almost all of them are winning and crushing. Those are the businesses that you want to own. The problem is, has the price run up way too far ahead of where they should be valued, right? So and that's where the sort of argument for indexes comes in, is like, is there going to be a crash? Yes. Are things like ARK going to be hit way harder than the broader, the cigarette companies? Yes. So what should you do as an investor? My approach has been like, take a bunch of money from the public markets, say half, and diversify into illiquid asset classes, right? Like private startups, you could do real estate, you could do something else, you could do Bitcoin. You could also invest in other countries, right? So like, that have much lower valuations. So Canada, Europe.
But Debbie, do you do that? Like, because I don't know, maybe I have the home bias, right? Maybe I have that problem where, like, look, I like being able to go. I mean, when we're not in COVID, you go out to the mall and go see a line out the door at Apple. I don't know what's happening at what is it, a JMI or whatever, the I think it's the South African Amazon or something like that. Like, what do I know? I have no idea. Sure, maybe I could get some sweet returns in Taiwan, but how am I supposed to pick? Going to a different country. What's your take on that?
Yeah, that's again. So I would only invest in things I know, even if they're in other countries. So U.S. companies are, they're not a bad way to get international exposure. So I think somebody did a study on this where the S&P, I think that like half of it or like a big chunk of it is actually there is a lot of international exposure already built into the S&P. But if you pick things like Apple or Tesla, you're actually getting a lot of international exposure, right? China is going to be Tesla's number one market fairly soon. Apple is already there. And I'm actually incredibly bullish about Apple. I think some of these big tech names, the US big tech names that are not meme stocks, right,
Right.
are much more fairly valued, and they have really interesting things happening in their business. So, for example, what Apple is doing with the M1, the new chip, is just incredible, right? Like all of YouTube has been going nuts about it. The price to performance ratio is just destroying Intel. And they haven't even come out with their best versions yet. That's happening later this year. And Intel, Apple is valued at like 38 times earnings or 40 times, something like that, right? Compared
Right.
to 200 times earnings for the meme stocks. So and they pay a dividend, and like, oh my god, like this is going to destroy competition in the chip industry. Is it about, like, I own Apple. I think it's one of my core holdings, and like it's great. Google is another interesting story. People focus on like antitrust, break up these guys, these social platforms, but here's the case for Google. They're the only company in the world to have demonstrated quantum supremacy, right? Uh, Number one in quantum computing, hasn't commercialized yet. They're the only company in
Right.
the world that actually has driverless cars on the road today, driving without a driver with Waymo. Now, sure, you can argue Waymo versus Tesla, but like Google's valued at like 30 times earnings, right? Like they're the
Yeah.
only company in the world that has the world's largest video marketplace, right? Content marketplace that is growing 50% a year. That's YouTube, right? And it has massive network effects. It's the world's number 2 web property. Like you go on Alexa or similar web, YouTube is number one is Google, number 2 is YouTube, and 80 to 85% of YouTube's traffic is on mobile. And despite that, the web version is number 2. Like, and it's compounding at 50% a year. Like, this is going to
Yeah.
be as valuable, or if not more valuable, than the rest of Google in 3 to 5 years, right?
Oh yeah. Yeah.
At this, so I think and I own Google as well. So
It's
there
funny. I
are.
actually have I couldn't, sorry, I couldn't agree with you more. I have a Bloomberg intelligence piece just sitting on my desktop, and it's literally, you're not going to read this, but it literally, sorry, it's zoomed in there. It talks about, or touches on how almost potentially undervalued YouTube's ads are, right? Like the ad ecosystem, how potentially undervalued that is. And it's sometimes difficult, and I catch myself doing this, like, I feel like, oh, well, I know about YouTube ads, so everybody knows about YouTube ads, right? Because like it's so in my face, I feel like everybody already knows about it. And that is Google maybe just a cash park, right? Like it's never going to go bankrupt, at least certainly not in the next 20 years. Unless something replaces it, something crazy happens. But it almost feels like one of those companies like, oh yeah, you put your money here, you get your 10%, your 7% return or whatever, you're out of here. You're not getting the maybe the 10x anymore, right? Because law of large numbers, it's already so big. What's your take on that? I mean, does YouTube and YouTube ad revenue have the potential of actually 10xing Google again?
I like how you put it. Kevin, like Google is not a 10x company just because of how big it is, right?
Mm.
But I think of them as compounders, who are winning at what they're doing, right? So
Okay.
Google has the potential to sort of 2 to 3x because there are core assets inside of Google, DeepMind, right? Number one in AI, right? But there are these core
Yep.
assets that YouTube, nobody else in the world has, that each of them could be worth more than Google's existing business in 5 years, right? Um,
Wow. So all these
so
components could basically individually be worth more than Google is worth collectively today, is what you're saying.
I think so, right? So and the core
Wow.
business is doing fine, right? Like you look at the recent earnings,
Oh yeah.
earnings were up 25%. YouTube is up like 47% or something, right?
Yep.
Um, so I think actually things like Google, Apple, some of these like um, more fairly valued tech companies that are winning at their core business or parts of their core business might be a good place to diversify and park away capital away from things like ARK, right? So like if you are
Mm.
concerned about a crash, and of course there is a lot of froth in the market, so you don't want to go illiquid. This is something as I have been doing. I haven't completely gone to private or illiquid. Like I am rotating out of things like Fiverr and Square, not selling all, but like selling a chunk and going into things like Google, where okay, you're not gonna 10x, but if you make 10% a year for the next 5 years, and there's and a crash happens, like Google is not gonna crash more than 50%, right? Um,
Interesting.
Google is Google is much more like a industrial company at this stage rather than someone like a Tesla. The
That's
stock, the
interesting.
stock, I mean.
Yeah. So I mean, right. The way it's trading, right? Because Google's trading for 30 times earnings, Tesla's trading for 30 times earnings in 20 years, maybe 10 years, but yeah.
Yeah.
So no, that's interesting. So really, what you're doing is you're taking money out of these companies that, in order for the valuation to make sense, you have to have this insane growth. Like Square is one of those. Square is one that they have to have some insane growth to get to like an 80 times earnings multiple, in the future. Just to price them at 80 times earnings, the growth has to be insane. So you're saying, let's get money out of some of these where it's like, guys, we are being too euphoric here with the estimates. Let's take a little bit of profits, take some money out, and just put a little bit into the Google and the Apple, something that's maybe going to fall less severely in the event there is some kind of crash. That way you're not going into cash completely. That's about what you're saying, right?
Exactly. I think take half your profits, get out of margin,
Wow.
completely out of margin, right?
Zero margin.
Zero margin.
Wow.
Margin was a great play. Good way to sort of choose returns the last 2 years. But like, look, if you do believe that these are frothy valuations, then margin is the last thing you want to be in. Get out of margin
Right.
completely. Um, um, you know, don't try to stay away from derivatives, which kind of go crazy when markets crash or
Yeah.
go upside down. So any kind of CFD contracts, futures, options, just be incredibly careful. Know that you're not an institutional investor, um, and rotate into things that are winning but are much more reasonably priced, right? And like, look,
Hmm.
if you don't make 50% a year and you're only doing 10% a year for the next few years, and you're able to survive a crash, like, is that bad? Like, that's perfectly fine. Like, remember, the long-term returns that people have seen for 100 200 years is 10% a year, right?
Right.
So the
Right.
world
Yeah.
we're the world we're in, where we're like doubling our money or tripling our money every year, this is not sustainable. Like, the world isn't big enough for these companies. Like, we'd have to have, I don't know, like, the market would have to be 10 times bigger for some of these growth rates to actually work out into infinity. So um, another company I actually really like is TSMC. I own some of that as well. TSM, I think the stock term, Taiwan Semiconductor Manufacturing Company. And
Uh,
if you cannot buy a PlayStation or an Xbox today, huge shortage. This is why. If you can't buy graphics cards from AMD, this is why. They are them and Samsung. I think Samsung is underappreciated as well, but I don't own it. But these guys
Mm.
make chips for everyone. Other than Intel, everyone, most of the big people, including Apple, like make their chips with
Oops.
TSM, and it's much more reasonably priced, like an industrial, profitable company. And given sort of what's the destruction that's happening at Intel, they are the only other manufacturer. Like they're already at 5 nanometer technology, and Intel was at
Wow.
14, right? And it
Yeah.
takes three years to jump. So it takes 3 years to go from 14 to 11, 11 to 7, 7 to 5. And the smaller the size, the better the performance, right? Less power, less heating, sort of faster frequencies on your processors. That's how, that's part of the reason why like Apple is so far ahead with the M1, is their tech is just like 3 generations ahead of Intel and 1 generation ahead of AMD, right? And who makes these chips for Apple? It's TSM. Um,
Huh.
so, but it's
Yeah.
not
I
it's
mean,
it's
so
not going to 10x. It is a winning compounder. It's not a 10x play.
a winning compounder. I like that. So winning compounders versus winning compounders. Really, yeah. Winning compounders versus stocks. How or versus 10x stocks. What percentage? How would you divide a portfolio? Like, how much of your money would you put into winning compounders versus 10xers?
Last year, I think I was like 90% 10xers. Now I think I'm still transitioning. Some of it is going private, uh, but I think you want to be at least 50% compounders, maybe 70% compounders, maybe
Mhm.
more if you really want to get defensive. Um, there are still some good, interesting 10x plays, incredibly risky. So I wouldn't put like a big chunk of the portfolio in there, but I like Shift. I know Kevin, that's one of your positions as well. I really like Shift. I've
Yeah.
bought and sold cars with them for the last 2 years. Um,
Oh,
I bought two cars on Shift, sold one, and that was 2 years ago. Um, and
nice.
it was a great experience. Great experience, right?
Yeah. Yeah.
Saves you time and bullshit, and you don't have to go to the dealer, and you don't have to sell it on Craigslist. And somebody comes to your house where they give you a check, and you give them the pink slip, and you're done. It's amazing. Um, so I like Shift as a marketplace. And so Shift I think could be a potential 10x. It's also a very sort of micro cap stock, right?
Super
So
small. Yeah.
super small. And the stuff that 10x is the law of large numbers. To your point, Kevin, it's going to be something that's super small. So if you're looking for a
Yeah.
10x, a lot of risk, it's got to be a company that's like less than $1 billion or less than 5 billion in market cap today, and you've used the product. It's a winning business. It's crushing it, and there's massive room to grow.
Yeah, that's fascinating. What do you think about this whole the SPAC craze? Is it sustainable that a CCIV, rumored partnership with Lucid, rumored, just rumored. Is it sustainable that something like that goes from, obviously $10 par value to just $40 and we don't even have confirmation?
Um, I read an article recently that when the amount of money that's going into SPACs is the surest sign that we're in a bubble, right?
Yeah.
And there was a
Yeah.
chart I saw where I think for like the last 10 years it was something like 10 billion a year going into SPACs, 5 billion, 8 billion, and then last year we had 80 billion or something. And I could be a little wrong on the numbers, just ballpark. 80 billion last year
Mhm.
went into SPACs. Um,
Yeah.
and then this year we're at 40 billion, and we're in Feb. We're in the middle of Feb, right? Like what the f, right? Like, um, so
Yeah.
so I think some of the early SPACs were probably really good, but now we're in like crazy bubble mode, especially with SPACs. So don't get spanked with SPACs. Um, just be incredibly careful. Only buy things you truly use and understand. If they, a SPAC is not a golden ticket. It's not going to guarantee you your 10x or whatever. Um, a SPAC should be treated no differently than an IPO, right? Just because it's SPAC doesn't mean, oh my God, this is sort of a great opportunity for retail to rush in.
Yeah, I mean, there's so many SPACs that get announced. Then, I'll see the alert on Bloomberg. Then, I'll look at the company, and the slide deck is a big freaking sales pitch. They talk about all these partnerships, like the famous the EV partnerships. Everyone's partnering with UPS and Amazon. Then you pull up these these order histories, and these orders are from like 2012 or 15, and they haven't had reorders yet. Here they are SPACing. Are these companies just SPACing because they want some extra money to try to evolve into something, or like what's going on? What's the thesis here, and are people being misled by these slide decks that are all pro forma? Oh, look at us! If we just get 1% of this $2 trillion market, we're huge.
Yeah, stay the hell away from this stuff. And sorry, I think my son is back with his friend, so you might hear them a little bit in the background. But
no worries, no worries. We've been going for an hour and a half anyway. Thank you.
No, like stay the hell away. I think the people who make money in SPACs that are ridiculous are the issuers. The people sponsoring the Chamath, and the management. Yeah. Now Chamath, I will say Chamath is probably higher quality than most, and he's putting in a significant amount of his own money into each deal, so I respect that. And I think for the most part, like, he is thinking 10x, he's thinking long term, he's picking better companies than most. But keep in mind that these are still insane valuations, like the world we're living in. Right, like Airbnb, for example, did not SPAC, and this was last year, so it wasn't as frothy as things are now. But Airbnb IPO'd, the shares were trading at something like $60 before they IPO, right, in the secondary markets. And everyone thought that was an insane valuation, right? Even the founders of Airbnb were like, we cannot believe that we're valued at X at $60 a share, right? And they go public, and what happens? The first trade is at 149, right? Or something. And now it's at like 200 something. So do the earnings of the business support that today? No. Are they going to support it in 3 years? Who knows? In 10 years, it's still probably a great business, but so just be mindful of, it's just frothy. There's a lot of froth out there.
Yeah, that's incredible. You're so, I mean, geez, this has been really insightful. I love this idea of the winning compounder versus the 10xer, where in a crash you are going to save a lot more capital with a winning compounder than a 10xer, which could be a 10 divider. What 10? Tell me though, what are some of the catalysts that you're looking at for this crash, and what kind of wrap up on the idea of like what do we look for on a potential crash coming?
Bubbles can pop for all manner of reasons. Right now, sort of the next round of QE is probably holding things up, right? So if they do that, and then they don't do any other QE or anything else to prop up the markets after that, that might cause it. But fundamentally, this is going to start to peak and boil over when we run out of buyers who are willing to buy at these prices, right? Fundamentally, like, what is a market? A market is a group of millions of people who individually are making their own investment decisions. And more when you listen to these talk shows and like smart money, dumb money, whatever, more and more people are like, Tesla was great, Etsy was great, all of these stocks were great, and I bought, like, I don't know, 100 grand or whatever at a year ago at this price, and now it's trading at a 200 PE, 500 PE, 300 PE. am I going to buy more at these prices? No. And I think even most
No.
Robinhooders and most retail investors are like, okay, I had a great run, but am I going to buy more of the same stock at today's price? No. Right. And when you get to a world where like the majority of people are saying, no, we're not going to buy at these prices, these are ridiculous, then the prices start to go down, right? And the fact that there's a lot of margin in this market, there's a lot of people who use margin on the way up. When things start to slide, they're just going to get crushed on the way down. So that's what sets it off right now. I think QE, stimulus, these things are probably the recovery, obviously, right? Things are propping up the market. And when we run out of buyers at these prices, that's when this thing falls apart.
Yeah, that's interesting. Take a look at this. I got this Y chart here from Finra's margin statistics. So let's see. It looks like basically all-time highs. So what do we add here? Yeah, so going into the pandemic, we had around 560 billion in margin outstanding, 550, 560, which has actually been pretty consistent throughout 2019. We saw margin actually got reduced about 100 bill when rates went up, because interest rates went up over here. This is when you could get that 2% on your high yield savings account. And obviously it increased up here with the cheap money. We got the straight up until rates went up, and then we had that sort of deleveraging. But then, of course, since pandemic, it didn't grow incredibly fast. It looks like it really took until like the summer to get back to the levels where we were before. But it's what's fascinating is here, we had this crash in September, this sort of tech sell-off. But this is crazy, and I haven't looked at this recently, and I'm happy you brought this up. But look at this insanity of margin debt from October to now. I mean, this is actually ending in December. We don't even have the January data here, but I mean, this is straight up right now. That's incredible, and that's just December.
That's crazy. That's crazy. I've never seen that chart before, but that's crazy.
So really, I mean, if I want to find out if I could get some more updates on this one, the Finra margin debt. I'll do a little bit of hunting for
Kevin,
this. Let's see if we could get
Can you give me a minute? Let me just. I'll be right back.
Yeah. Of course. Second. Yeah, sure thing. Yep.
I'm drinking too much coffee. Gotta pee.
No worries. So yeah, I mean, take a look at this for a moment here, or let's just reflect on this right here for a moment. It looks like we don't have January data yet. That'll be fascinating to see. But here's an article from Jan 22nd. Okay, so probably in about 10 days is my guess, we'll get the new margin data. And here's another article on this. So margin debt and the market up 7.7% in December, another record high. New York Stock Exchange, and let's see. Okay, and more information on this, but really, okay. Here's where they put margin debt and the S&P 500 together, going into 2021 here, which we don't have the 2021 data yet. But it makes you wonder if all of this is being frothed up by the idea that, okay, now it's time to take on margin. And now people go from 5, or let's say they go from 0% margin to, 20% margin. Then at some point that stops. At some point we hit this threshold where we say, no. It's time to deleverage. It's time to sell off that margin. And that happens around the same time we stop being willing to buy stocks at certain levels. Is maybe margin what ends up becoming a catalyst for a crash in the future? I mean, take a look at this. I posted this on February 1st. I'll have to do a new one of these, but I mean, this was less than 2 weeks ago. I mean, so far, maybe not. But take a look at this. This was at least a poll of all of y'all who follow on Twitter. Thank you for following me on Twitter, at RealMeatKevin on Twitter. Take a look at this. How much margin, debt on stocks, are you using right now? Of course, I imagine people who use margin would know that is debt on stocks. 82% of y'all said less than 20%. So maybe I should do like another poll here. In fact, we'll do that really quick. Let's do another poll on Twitter, and then we'll jump back into the conversation here, because I want to hear from you. You're watching this. We're having this conversation together right now. So how much margin debt on stocks do you have today? 0, less than 5%. We'll go a little more small here, less than 15%. Or we'll do more than 15%. Yeah, that's let's make 20% the threshold. Okay, we'll do that. We'll make 20% the threshold. Let's see how that. No, because before we had so many people that didn't say they got up to 20%. So we'll do this. So jump on over to @RealMeatKevin on Twitter. I want to see these votes here. How much margin debt on stocks do you have today? And I don't know. Let's do like a couple hashtags here, like YOLO and I don't know, the moon. Okay, so we'll post that here. Let me know. We'll circle back to this. It'll be fascinating to see what kind of votes we get. That's @RealMeatKevin on Twitter, and I will look for your votes. Welcome back.
Oh, thank you. Starbucks is great, but it does make you pee more. So
This is true. So, I mean, is this then, while you were gone, I was mentioning it's possible that, at some point where, right, you mentioned your line, the peak is when we run out of buyers. Are we going to run out of buyers when people stop pulling on margin?
Yeah, I mean, look, I think there's a number of ways we can get there, and I think that poll is a great idea. I'd love to see what the results look like in a few minutes, but it could happen a number of ways, right? If interest rates go up even a little bit, right? Because the dollar has been in decline for the last year and a half since we've been at 0 interest rates. If you look at the DXY, I think it's trading at 90. It's like at a 3-year low, maybe 4-year low, something. And so at some point it crashes, maybe it gets to like 80s. The Fed is like, okay, well, we can't play this game forever. Let's like pretend we're going to raise interest rates. And I don't think they can ever go back to like the 4 to 6% long-term average. Like it would just bankrupt government debt. But even if the Fed says, okay, let's bump rates half a point to 0.5 from 0. So the margin rates go up, right, on all the brokerage accounts because of that. And there's less margin. Margin becomes more expensive. But rates going up could cause it. Lack of more good reasons after this next round of stimulus could cause it. Like if there's no more stimulus, maybe the recovery takes longer. But fundamentally, it's when the majority of people in the market say, I am not buying at these valuations, right? It's kind of like you can look at GME and what happened there and kind of extrapolate what, the rest of the market is. People want to buy up on the way up. And eventually, why didn't GME go to 10,000 a share, right? Why did it stop at like 400 something and crash back to 50? That's because at 300 to 400, as the price kept going up, eventually you ran out of buyers. They ran out of people willing to buy at those prices. So at some point at 400 something, the majority of people were like, okay, we're not buying anymore. Maybe, we're done. And so there are more sellers and buyers, and the stock went down. So it's basically the same thing that's going to happen in the broader market. It'll just take a lot more time.
Got it. Now, can you use Bitcoin to hedge yourself, or is Bitcoin going to come sliding down as well if there's this interest rate inspired sell-off?
I think Bitcoin is a 10x. I don't think it's a winning compounder. So I think when this crashes, Bitcoin is just going to crash hard. But at some point, it's going to go back up, and it'll be higher than where it is today. I do think that Bitcoin is a 10-year hold, long-term hold, and but it is more similar to a 10x than a winning compounder.
Got it. And then do you think it's possible that Bitcoin's going to come solve these issues that we had, for example, with Robinhood restricting trades and, reducing that momentum? Is cryptocurrency going to have a place in faster transactions?
I hope so. I think, what happened with Melvin and Citadel and Robinhood just like stinks of like, fraud. Like, That's a strong word. And it may not be fraud, but it really like feels like manipulation looking at it from the outside, right? And it may
Right.
not have been Robinhood causing it. It may really have been the people who Robinhood relies on for their revenue, which is Citadel, right? Um, uh, uh, who benefits? Like when something like this happens, you got to ask like who benefits? It's the people who are shorting the market, and that allowed them to get out of their positions and unwind their positions. Otherwise, they'd have been truly effed, right? So even though Melvin went under, Citadel's losses were tiny, right? Like, and they got out. Um, uh, uh, so look, I'm not an expert. I don't know how these things work on the back end, but I do hope that we get to a world where crypto solves. There are many problems in the securities markets. Like people in India, for example, or Pakistan, like or most of the world can't buy into U.S. equities, right? Because of capital controls, they can't get money out of their country fast enough to buy the investments that they want. They can't buy into Apple, they can't buy into Tesla, they can't buy into these. So I think crypto can be a great on ramp, off ramp to solving capital controls and letting people kind of invest freely. Whoever does that is going to become they're going to have a giant target on their backs because the regulators and the central banks around the world are just going to hate this stuff, right? They're just going to hate it. They're going to throw people in jail. There's going to be a lot of like hammering down, and it's not going to be pretty. I mean, it's one of my pet peeves is the fact that you can't buy and sell global securities from anywhere in the world, right? You have to go through brokers and their agents, and like it's a complicated mess, and its access is incredibly uneven. The poorest people in the world do not have access to the same best assets that the rich do. They just don't. So you know, I hope Bitcoin helps solve some of these problems.
That's interesting. So really, I mean, I love this. It's almost like a balancing scale of having 10x stocks and having compounding winners. And if you want to, be a little bit more protectionist, you go a little heavier on those compounding winners, maybe like the Googles, the Apples, rather than the 10x's. Where do you place a Tesla?
Oh, geez. I mean, I regret selling. I wish I was still in it. I regret selling too early twice. Um, I wouldn't. I think Tesla is great company. I think the business itself is going to 10x from where it is today, right?
Okay.
I don't know if the stock price is going to 10x from where it is today because it's already like 10x ahead of where the business is today, right? Like roughly speaking.
Right.
So, what I love the business. I want to buy in more whenever there's if there's a big crash. I think Tesla's like Bitcoin. You just go buy a lot. I think Tesla and Elon are going to get to their stated goal of like producing 10 or 20 million cars a year, whatever they have, right? Like they're at 1 million now, and people said they'd never get here. Like there was a time where they were making like 1,000 cars a year with their original Roadster. I actually owned the original Roadster. And idiot me, I didn't buy the stock. Love the product. Should have not, I bought anyway. So Tesla's a 10x, I think, if the price comes down. For me.
Got it. Any particular level of Bitcoin you're looking at? Like, is it sub 20K? Is it sub 30K? What's the price where you're saying, I'm throwing more in?
So I did buy more at around 30.
Okay.
It took so long to sort of fund accounts and like get I bought some at 13. I bought some at 30. Most of my holdings are from when it was like $1,000 or $2,000 or $3,000, somewhere in that range. But But I think you can dollar cost average in, right? Like the price is going to seesaw massively, but if as long as you're not putting all of your money into it, it's a small part of the portfolio. Your dollar cost averaging in, even the price today is totally fine. Just don't sell.
Wow.
Keep it for 10 years. Like,
Keep it. Okay.
Yeah. You have to come on the show,
So you bought,
and you have to come and show and publicly be shamed if you sell it, right? Do not sell it.
Got it. So buy it for 47, and if it goes to 20, diamond hands, baby, you keep adding to this puppy.
I think so.
What about
Bitcoin
Ethereum?
Is similar, more volatile.
Is it worth having a split? Like, do you put 60% Bitcoin, 40% Ethereum? I don't know, 1% Doge. What do you do?
It all depends on what Papa Elon's going to tweet about, right?
Yeah.
Look, I mean, what I remember from the last boom and bust with Bitcoin back in 2017, 2018 was, in a bear market, Bitcoin outperforms all the other coins. In a bull run, ETH and some of the other ones, the more credible ones tend to outperform Bitcoin, right? So there's this thing called Bitcoin dominance. If you go on Coin Market Cap, right at the top, there's what percentage of all of crypto market cap is Bitcoin. And so in bull runs, that tends to come down. Bitcoin's a smaller proportion of the overall pie, which is growing massively. But in bear markets, everyone runs to safety and goes back to Bitcoin.
Got it. Wow. And it looks like the vote just happened, and it looks like Donald Trump has been acquitted by a vote of 57 to 43. It's a pretty incredible time that we're in, huh? Anything in politics that you're looking at to guide your investments? Are you looking at Biden's infrastructure plans coming up, stimulus? Any last thoughts on politics related to investing?
I don't know what effect this is going to have on the markets with Trump specifically, but I think the biggest item in politics that sort of a question for the markets is, is the next stimulus going to happen, and how big is it going to be, right? That's sort of more important, I think, for the markets. But Trump getting acquitted probably means, whether you agree with the decision or not, it probably means there's going to be less turmoil because people aren't going to protest that he's going to jail or something. So yeah, I don't know. I think he's lost year's story. It's done. We got to look forward and focus on sort of improving the country and doing things that are good for markets. And so the stimulus is more important.
Got it. Focus on the stimulus. Perfect. Any last thoughts that you have? We're coming up on a couple hours. I thank you so much for taking all this time with me. This has been so incredibly insightful. Taking some notes here. Last thoughts that you have? I will pull this up really quick and just say it actually looks like 76 of 1,600 of you who voted, 76% of you actually say $0 of margin. And I would have to, we got about 12.4% of you are more than 15%. And then some of you have the smaller amounts here. So actually not as much as I thought. Maybe the Meet Kevin viewers are less in margin, which is probably a good thing. But any final thoughts you have? Yeah.
That poll is great to see. I would be curious of the people that are more than 15. How deep in are they? Are they like higher than 50%? That might be sort of an overlap with the YOLO Wall Street Bets crowd, but
400%.
I've mortgaged my house, my wife, my kids, sold them into slavery. I'm all in. Let's go.
Go to the moon.
Go to the moon. Look, crashes happen, and who knows what's going to happen in the future. I think invest in businesses that are winning fundamentally. They're doing the right things, and they're crushing their competitors, and they're growing market share, and the products are just amazing. don't buy a stock in a business where you wouldn't buy the product, right? Please. And work hard. There's no free lunches. Like, I think your story is really inspiring, Kevin. Like that video that inspired me to reach out, right? Like you were like, I started at nothing, and then I bought a house, and for like 3 years I just had one house, and then I added one more, and then there's an exponential curve, and most of the gains came in the tail end of the curve. So I think that's great. Work hard. There's no substitute for that. And the markets aren't going to save you if you're just lazy bum sitting on your ass all day. So I think your story was great, and I'm glad we ended up here. Thanks for inviting me. I didn't expect to be on the show. I was just like, hey dude, I love that video. That was so inspiring and so great and touched me. And you're like, hey, you want to be on the show? And this is great. Thanks for having me.
Hey, absolutely. Thank you. Thank you for taking the time. I think it was great. So very insightful, and hopefully everyone watching felt the same way. Certainly, if you've enjoyed watching this, make sure to subscribe and share the video. How do people get in touch with you? I know we've got stonks.com that they've got to sign up for. Any other way that they can get in touch with you or follow you on social? Shout yourself out.
Stonks.com, and then I'm on Twitter at Ali_Moiz. So I'm always looking for smart people to talk to, companies to invest in. Yeah, thanks for having me, Kevin. When Bitcoin hits $1 million, I would love to come back and be like, booyah!
Well, hopefully we'll get to talk again before that, unless it comes really, really fast. But this has been great. Really appreciate it. I will. I'll send out a tweet with a link to this and your Twitter as well. And hey, thank you everybody for watching. It's been a blast, and enjoy your weekend. We'll see you. Bye.